Welcome to TheoTrade. This is Don Kaufman, April 13th, 2020. Just moments left inside of your trading session with earnings right around the corner. But I guess the question to ask is this earnings season, is it going to matter at all? We're going to look at that here momentarily. As I said, with just seconds to go to the cash close, the S&Ps are off right now about 25 handles on a little bit of a bid in this last hour of trade. Nevertheless, this trading session is it's all about the 2731 gravity point, and that's where really the majority of the entire trading session was rather persistent around that 2731. Now, before we get ahead of ourselves and looking at the markets and really kind of digging into what's going on in today's trading session, you should push that aside for just a second. And one of the things I say when I push this aside, does it really matter? The S&Ps were down 25, the Nasdaq's up, some 92. Yeah, there's a sector rotation going on in there, which I'm going to discuss here momentarily. But the European markets were closed, for the holiday weekend. They actually had a 4-day holiday over in Europe. So on this Monday, the European markets were closed, which really did have quite a little volume impact to the S&Ps. I mean, as I've been pointing out day in and day out, the volume in the S&P futures has been light on a relative basis. Today we're lucky to do 1.5 million contracts coming into the cash close, which is inordinately light considering, and again, I think that this kind of speaks volumes. Look at the high to low. Again, this of course includes overnight trade in the Globex system, but nevertheless, high to low, you have over a 100-point move. Again, a 100-point move inside of the broader marketplace. There's the closing bell. Nevertheless, very, very light volume because the European market is closed. Therefore, I have tendency to not read too deeply, again, into some of the price action that we're effectively seeing here. All right, so as I said, a lot of today's action was right around the 2731. Just to give you a little bit of scope right now, we're actually going to flip this chart, over to none other than, this is a 30-day 1 hour. And I've been saying this just day in and day out. We're pinging gravity points, literally, back and forth from particular gravity points is what we've seen in recent trade. And the central point as of late has been, just south of where we currently are, which is 2731. Now, let's kind of get to work. As I said, there's a bit of a sector rotation going on today, and I have to tell you, it's rather surprising to see what's rotating. And what do I mean by that? First of all, the marketplace appears to be rotating specifically out of financials. Now, that one's a little bit baffling because the financials have been just hammered in this market as of late. I mean, they're still down 27% year to date. And ironically, trade is rotating into most of your monsters of tech. Again, the monsters of tech, this is a conglomerate symbol, that I actually built. It's Facebook and Apple and Microsoft and Google and Amazon, but it is it's notable. Amazon, of course, having a 6% rally. Netflix having a 7% rally. Now, Netflix is not per se one of my quintessential monsters of tech. Nevertheless, it begs to be discussed because at a 7% move, that is actually causing a whole lot of market cap and force to the upside. And Apple, even after receiving a downgrade today, is bid by the tune of almost 2%. So why am I a little bit baffled by that? Because this is a sector, again, you have expectations that's probably going to take a larger hit. I mean, hey, listen, technology has been relatively unscathed. As I was saying, though, a moment ago, I don't want to read too deeply into some of the price action today and into the rotations. I would anticipate that in the next couple of days, and I think that this is the important kind of takeaway, from this, I would anticipate in the next couple of days that we're going to go back to heavy degrees of correlation. And I want to reiterate that because it's of critical importance to any and all of us involved in this marketplace. Again, this is the S&P 100. When I start talking about going back into things like correlation, what I'm referencing is, days where we're down and you have 92 stocks down, or days that were up and you have literally 100 stocks trading to the upside. The advanced decline, should be pegged at one side or the other. This, in the midst of volatility, it speaks volumes. This is a little bit of a slop fest inside of this marketplace, seeing that only 72 products happen to effectively be trading down. Again, I believe that just in the next day or two, we are very likely to see, again, high degrees of correlation, that the lack of correlation today is obviously due to a sector rotation, and that is, again, out of some of the small caps. All right, so you got the Russell down by the tune of about 2.7%. I mean, that's substantial. The Russell's off 2.7%. The Nasdaq's up 1%. Divergences like this, you don't see this kind of stuff every day. Okay, so with that, again, you also are seeing, by the way, a little bit of a rotation into some of the consumer staples, but neither here nor there. Look for high degrees of correlation, got to hit the marketplace. All right, let's move onward and upward. Earnings, they're coming. Is it really going to matter? Well, let me show you what really matters. And I got through some of the general market talk, but this is what's going to impact us, okay, right here, right now. When I say right here, right now, well, what's coming out with earnings first? The financials, which of course, overall, the XLF took a bit of a hit today at 3.6%. Okay, but let's get really specific. Your big banks are coming out. When? Tomorrow morning. All right, so tomorrow morning, yeah, this is going to happen. Either you've placed your trades or you haven't placed your trades, but this is going to happen. All right, so JPMorgan is due up first thing tomorrow. Wells Fargo is due up first thing tomorrow. Then, okay, in subsequent days, you got Goldman Sachs and Bank of America. I mean, listen, all your big banks are coming out with earnings, okay, in just the next couple of days. But JPMorgan, this one really matters. And I'm actually going to show you precisely why I believe it matters so much. It has everything to do, okay, with implied volatility. Now, you can look at this as opportunistic if you would like to. I tend to look at it as a whole lot of risk. What I wanted to point out here is that JPMorgan this time around, this earnings period, it's about a $98 stock. Ironically, it sold off a decent amount in today's trading session, as I was highlighting a moment ago. But I really want to dig into, though, if you take a look at what's termed expected move, and this is something that everybody should look at, okay, coming into earnings announcements, especially if it's something as large as JPMorgan that can clearly and decisively move the entire marketplace. What's interesting here, you're like, okay, so what is it? $7.90. What does that matter? Come on, it's $7.90. Okay, you can't just look, right, at this earnings announcement. How does that compare? And this is the big takeaway from this. How does that compare, okay, to a previous earnings announcement? So for that, okay, and to show you the stark contrast of what's going on in this marketplace, and that, you know, for all of you to realize, you know, we're not in Disneyland anymore, okay, and no pun intended with that one. I wanted to show you the previous earnings announcement was January 14th. So January 14th. So we're going to cruise over to the analytics on thinkorswim, and I'm going to go ahead and I'm actually going to pull up right there. See it? Okay. January 14th. Why? That was the last earnings announcement. Okay. I want to see what the market looked like, okay, the day just prior to it or a few days prior to it. And it's okay to go back in time. Why? Because you're going to get a feel of what volatility looked like. And again, I want to reiterate this. You're going to get a feel for what volatility looked like in the days coming up to this particular earnings announcement. But more importantly, you're going to get a feel, okay, for the marketplace and how much risk is really embedded in there. So here we go. I go to the day prior to the earnings announcement. Okay, JPMorgan last go around was about a $137 product with approximately a 35% volatility. But that was on about a, let's just call it a $4.28 expected move. Nevertheless, though, the stock was 40% greater. Now, where are we at? Okay, once again, now it's going to start to make a whole lot more sense, and you start to put it into context. The volatility inside of JPMorgan is nothing less than massive in comparison. In fact, in all the years that I've kind of compared and contrasted, and I look at this kind of stuff where I'll look at the expected move, okay, and I'll go back 3 or 4 different earnings announcements. People, I'll even go back, okay, to some really serious risk in the marketplace. I mean, we can go back for years and years, okay, to look at JPMorgan. So I did. Okay, and I evaluated it. Nothing comes even close to the kind of implied volatility that we're seeing. So for opportunity, and this is something I'm going to be playing around with this week of trade, some opportunities may arise. This implied volatility being incredibly high versus, again, previous announcements, and the fact that the stock has already moved some $4.50. This could be opportunistic to possibly sell some options premium. It has been a really long time since I've sold any options premium around an earnings announcement. I am actually going to watch JPMorgan. Okay, I'm actually going to sit on the sidelines. In fact, I want you to know that I don't have any positions on specifically for JPMorgan, okay, or Wells, okay? But as we start to watch this, again, all of the companies, pretty much in the S&P 500, their earnings announcements are seeing literally like double, if not triple, the expected move, which is, hey, what you would kind of expect given the fact that the VIX is double or triple. Nevertheless, for JPMorgan to move a full $8, I mean, again, we're looking at what, 8% kind of moves inside of a bank, which again are absolutely massive. In the coming days, I'm actually going to spend some time here at TheoTrade assessing not only the JPMorgan trade, but a ton of different earning trades and looking, okay, for sell side opportunities in this marketplace. Again, it's all about the implied volatility. Expect in the coming days to see some of that correlation come back into play. Expect the marketplace is once again, we're not going to be sitting at 27.50 here 2 or 3 days from now. Get ready to rock inside of this marketplace. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.